Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 11:15 AM on Saturday the 6th of March 2021 and we're going to be doing something a little bit different today. We're going to be looking at two markets rather than one. We're going to be looking at our SPY, which is our proxy for the S&P500, as well as our NQ1, which is our proxy for the Nasdaq 100. Now the reason I'm doing this is there's something that happened yesterday in Friday's session which is essential that we need to discuss, but I'm going to leave that for the end of the video in a bit of a deep dive section of the video, which I'll timestamp. So if you want to stick around for that, you can. This is probably going to be quite a long video, so I will timestamp the analysis and then the deep dive section later. And what we're going to be looking at is what it means for the market, because essentially we have a futures market confirming a bear market in stocks to come and the death of the bull market, and then we have a cash market which isn't doing that. So we're in conflict at the moment and we need to consider our counts, the variable counts, what levels we've broken, what levels we need to see broken to confirm things, where that leaves us. So there's quite a lot to discuss in there, and I want to take you through it on nice clean naked charts so we can get a real grasp of what's going on. But before we do that, we're going to do our basic technical analysis as we always do, and our Elliott Wave analysis second for both the SPY and the NQ1. So they'll be timestamped and you can watch those independently if you want. So if you're not interested in all that other stuff, you don't have to wait around for it. Right, so without further ado, here we are on the weekly time frame on the SPY. So starting with our basic analysis. If you're new to the channel, let's give you a quick rundown of the chart. We have our Elliott Wave count, which is all the numbers and letters you can see on the chart. We're going to get rid of those now and hide them out the way. We have 4 exponential moving averages. Yellow is 10, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side with a built-in point of control. This is a visible range and adjusts when we adjust what is visible on the chart. We have an RSI set to a 10 close with a green 30 level for oversold conditions and a red 70 level for overbought conditions. We have a MACD with a 10 for the short term moving average, 20 for the long, and a 9 to smooth. So what can we see here for the week closing yesterday, Friday, for the SPY? Well, we've got a bit of a doji candle here. We're a long wick to the downside for the week, pushing down to test the area around the 20 exponential moving average here, and then getting a pretty strong bounce and pushing our way all the way back above the 10 exponential moving average on the weekly time frame and closing pretty bullish reversal candle. Would it be more bullish if we ended up with a bullish hammer with a green top of the body of the candle and a long wick to the downside? Didn't quite pull well off, but we tried like bugger in the last few hours of Friday to do it. We really did hit something down here and start turning. Now this doesn't necessarily mean that we're going higher. It could just be a bounce before we go lower, but we have to consider what happened down here. So let's come down to the daytime frame. Oh no, sorry, before we do that, sorry, I neglected a few other issues there, haven't I? So finished above the 10 for the week, above the 20, above the 60, above the 250. RSI is back into neutral territory, or just between the 40 and 60 zone. We have a MACD with a couple of red bars on the histogram here, and a short-term crossover of the short-term moving average over the long-term, which is traditionally a sell signal, but with this kind of candle, this reversal candle, above a major moving average for the week, we can't really take that as a sell signal yet. We would need to see price confirmation to confirm this a bearish breakdown, which I argue on the weekly time frame we haven't seen yet. So come down to the daily time frame. Below the 10, below the 20, 10 has crossed over the 20, above the 60, long wick through the 60, and then a bounce to close above it. Still below the 10 and the 20. Quite a bullish move up for the end of the day. Really did turn the market around on Friday, so potential to push higher from here with such a strong signal, but not necessarily the case. We will look into our count and we will read into what that could mean in our Elliott Wave section. Back into neutral territory between the 40 and 60, never reached oversold conditions on the daytime frame yet, even with the breakdown of these moving averages. First time we've broken down through the 60 since October, since the 30th of October. So significant breakdown, but not necessarily the start of anything worse yet. Could be a bounce from here. I personally was, I wouldn't say hoping, but I was leaning towards seeing a more negative close for the week, but we really did turn around violently, and we're going to discuss in the deep dive section of this video exactly why that happened. So if you're interested. Now let's go over to the Nasdaq. Same gig here. Let's hide our count. Chart setup is the same, except for some reason I'm missing my volume profile, so let's just bring that back up. And let's just save this now so I don't forget it. Right then, so on the weekly time frame, we broke through that 20 EMA on the Nasdaq. We finished with the body of the candle above it. It was almost as though, come hell or high water, no matter what happened, we were going to keep ourselves above this level no matter what. That's what it felt like when we look at the daily time frame. We turned around and desperately pushed to get above these levels. Closed below the 10. But above the 20, the bulls still hanging in there and testing an absolutely vital pivot area, which we'll talk about later. So defending that area. Now, RSI back between neutrals, in the neutral zone between the 40 and 60, two red bars in the histogram, crossover for short and long-term moving averages. Haven't got that confirmation below the 20 EMA in price action though, but it's not as bullish as the S&P for the week. Now, if we come down to the daily time frame, the situation looks worse for the Nasdaq, there's no denying that. Below the 10, below the 20, below the 60, above the 250, 10 now crossing over the 60. If we were to see the 20 crossover as well and sustain the price below all of these levels, we could call that a death cross. Now, it doesn't mean it can't bounce, but it's a pretty bearish signal. Bearish momentum seems to be dying off though. Ever so slightly after accelerating quite abruptly to the downside, seems to just be losing some momentum for the Friday. We see a lighter red bar and a bounce from oversold conditions with a double bottom here on the RSI. So a low and a lower low in price and a level in price here. Can't call it a true bullish divergence, but it's a bit of a hidden bullish divergence there, which brought about this bounce on the Friday and this desperate move to get back up from the levels of from the lows of the day. And those lows of the day were pivotal. So that's the basic analysis. So let's bring up our accounts and talk you through what I think is going on in these two markets here from an Elliott Wave perspective. So we're just going to zoom into the go full screen the chart and full screen the Nasdaq here. So let's start with the SPY. Right, so as you can see, my count has us topping here in a wave 5. Now, until this gets invalidated, that's still my count that the market has peaked and is now selling off and will continue to do so. This could be wrong, but until we see a new high, then this is the count I'm sticking with. Or until the count as I've developed it so far is completely invalidated. So I have us in 5 waves complete primary waves scale to the top. I then have 5 waves on the intermediate time frame here inside of this fib channel, fitting very neatly, that we've now broken out of, or broken through, or wicked through at least, also complete. So, putting it simply, this count calls for the market to have topped, and for a sell-off now to continue. So let's dig into the shorter time frame here, down, zoom in on all this more recent price action since the high, and come down to the 1 hour time frame, or to the chart, and see what we can see. I have us here in an expanding leading diagonal down into a wave 1-2. So we've gone 1, 2, 3, 4, 5 minor time frame, 1, 2 intermediate time frame, 1, 2, 3, 4, 5, 3 intermediate time frame, ABC, 4 not overlapping, overlapping the 1 but not cancelling, but not going deeper than where the 1 began, just stopping before the 2. Very odd. And very unusual setup, but still legal. Okay, and then it is counting as a diagonal. So diagonals tend to have this wedge shape, either narrowing or expanding, and this is an expanding one. This brings us down 1, 2, 3, 4, 5 minor time frame, intermediate time frame 5, primary wave 1, ABC into the 2, producing a pretty significant retracement on the primary degree. If this is correct, we got straight to the 78.6, this blue line here. Now you can see right in this load of volume here, this point of volume sticks out in the profile right at 78.6. We come pretty much to the tick, and then we turn around and head lower again, and then we can count another 5 waves down, 1, 2, 3, 4, 5 into an intermediate 1, ABC into a 2. Now if we take this so far and we just kind of run it down to the wave 1, we can see we've come into the yellow zone, wicked through it, and we're stuck around these moving averages on the hourly time frame, which is the 60 and the 250 here. I personally feel we could probably run the 2 back up to the 78.6 again on the intermediate time frame before selling off down into the 3, which I haven't placed as a prediction, but it would be way off down here somewhere, potentially lower. Now this count will get invalidated first at intermediate wave degree if this high here, let's just point this out. If a high here at 390.89 gets taken out, move a decimal point to one side, you've got 3,908.9, that's for the SPX, and 390.82 here on the SPY. So if you take this level out, then we can't call this a 1-2 because we've gone beyond where the 1 started, and that would pretty much undermine the rest of this count because the wave, intermediate wave 4 and the 2 were so close together. Then the idea of this being a 1-2, if this gets taken out, is likely incorrect as well. And then by the time you've done that, you're not far off the high. So it's not the strongest of counts from the high. A nice clean impulse wave down that you could read as 5 waves would have been much nicer. Now the bulls are going to want to read this very simply. They're going to want to read this as an A, B, C, and they're going to be wanting to read this as a wave 3 into a wave 4 with a 5 to come to a new high. That is a possibility. We'll discuss that in the deep dive section later. I'll explain why it's a possibility. But for the meantime, we're going to stick with this expanding move down into a wave 1, 2, and we're looking to go lower next week. But it is definitely possible that this correction is over. With this strong pivot Friday, we could come higher, but for the moment this bearish count is correct and the market is topped. Right, Nasdaq gives us a much cleaner much cleaner count on things. So if we just bring up our fib channel for, let me find it, here we go. So now this is a very neat fib channel, and this is based off the idea that we did wave 3 and wave 4 during that September-October correction last year, A, B, C, and then we started a new impulse wave up, which counts as an impulse wave in the Nasdaq. 5 waves, channeling beautifully. Ignore where the actual waves are complete, they're obviously inside the channel. I just had to position the number for you know, a bit ease of seeing it. So if we look at it like this, we can see that we've gone 1 top of the channel, bottom 2 of the channel, 3 perfectly top of the channel, 4 perfectly bottom of the channel, 5 perfectly top of the channel, literally perfectly inside of this fib channel. Just absolutely spot on to find our 5 of our 5 of the intermediate time frame of our 5 of our 5 and the la-di-da. And that's for some reason I've moved the wave 5 minor time frame is in the wrong place, excuse me. So there we go. That is the top of the market. I've got this as the Nasdaq, so let's just delete this out of the way. And then we get an impulse wave down in 5 waves. Now this, I'm counting this as a 1, 2 on the intermediate time frame, and then looking to continue lower this week on the minor time frame. But it could be 1, 2, 1, 2 like we've seen in the S&P, or I'm predicting in the S&P, or it could just be 1, 2, 3, 4, 5 down into a 1 with a 2 to come up. We're going to have to zoom in and show you that in a minute. But this channel and the breaking of this channel and the breaking of these supports and the rolling over of these moving averages is all a lot more bearish looking in here in the Nasdaq than it is in the S&P. So let's just come down to the 1 hour, zoom in so you can get a closer look at this thing. So from the top we go 1, 2, 3, 4, 5 diagonal into a 1, ABC 2, 1, 2, 3, 4, 5 impulse into a 3, ABC 4, not overlapping the 1 on the minor time frame, pure impulse wave here, and then 5 waves down into an intermediate 1. Job done. We then get a retracement of that wave 1, and we come to the 50% retracement, just peak over it, don't quite make it to the 61, right? And then we continue down, another diagonal in a 1, 2, 3, 4, 5 into a minor time frame 1, looking for a retracement into a wave 2. And if we just see what we did on the Friday, we've come back up to the 38.2, not quite at the 50, not quite at the 61.8, but we can leave it roughly around that yellow zone there and expect to see a 2. So similar to what we saw in the S&P, with slightly different count. If we take out this level at 13.31 spot 25, then we can say that this is invalidated in terms of this being a new wave 1, wave 2, because we can't go beyond where the wave 1 started. So an alternate way of counting this, if you want to stay bearish, we'll talk about the bullish case later, but if you want to stay bearish, then you have to look at this as a 1, 2, 3, 4 to here, and 5 down complete into a single wave of a 1. So this whole move is a 1. That's the alternate count. In which case, a 3 wave move off of the low, something like this, would be expected, and then continuation down into a much deeper bear market. So the overall retracement of the Nasdaq from the low now, if this is a wave 1, we've got the 61.8 here at 13.29 on the dot, 13.29. So you could come up to somewhere like this in a zigzag and then start selling off. 78.6 is all the way back at 13.558, which is the blue line here. So we could potentially retrace a lot further, but we need to see what happens next week. If we come up and start invalidating these highs, then we can think about this being a wave 1 complete. Of course, if we come all the way up and take out the previous market high, then this is all wrong and this is corrective rather than impulsive, and we're going up to another to a new high. And that is basically the counts as I see them currently for the S&P and the Nasdaq. Now I'm just going to have a quick sip of my coffee. Alright then, so for the meantime, we've broken long-term fib channels, we've broken long-term moving averages, we will continue to break down and form a series of waves down, which could confirm the start of a bear market. We may see a retracement next week, but we have to see an undoing of this count in order to invalidate it. But we could be wave 1 down looking for a wave 2 retracement. So for the meantime, we could have done a single wave down and we're looking for a retracement into what is the start of a new bear market. For the moment, I'm still happy to call the market as topped. Alright, but things, unfortunately, due to what happened yesterday on the Friday session, are not that simple now. So that's what we're going to talk about now in the next part of the video. So consider the counts complete for the meantime. Both are counting the market as having peaked. Both have impulse waves or motive waves to the downside, starting a new bearish trend. But we need to see confirmation in the weeks to come, and we will revisit the count probably at the end of next week and see if that's still valid. So now we've done that, let's move on. So what is this thing I've been talking about? Well, for that we're going to need to load up another couple of charts that I've got here, and we're going to load up a copy of the Dow, because we're going to need this in a moment to explain the issue I'm having with the count and the bull's interpretation of it. And then we're going to also need a copy of the Nasdaq with nothing on it as well, nice clean copy. Well, I have just started putting some very simple basics on here that I want to explain. So, and also we're going to need a naked copy of the S&P. Now, did I? Yes, I did do that. I was using the ES1 for this, so we get. This is the idea of explaining and explaining a potential higher high. So, right then, where shall we start? First thing we'll do is we'll save the traditional SPY chart. Don't worry, this will all be timestamped, and we'll get rid of the NQ1 count here as well. Okay, so and also we're going to need one more chart, which is the cash market for the Nasdaq, which is the NDX. Now I put that somewhere safe. Where have I put it? There it is. Right. Now I said at the start of the video that we had a market confirming a bear market and another one denying it. What did I mean by that? Well, you're just going to have to bear with me as I run you through how you have to interpret events in order to understand that. So, looking at my count here, this is the bearish count, right? Wave 3, wave 4, and then 1, 2, 3, 4, 5 in a perfect channel into a fifth, breaking that channel, and we're now on our way down. Now, I did label this as a potential ABC, but I've also got this labeled as an impulse wave, obviously, as well. So what we're going to do now is we're just going to shift this count into the most common, or most commonly observed, bullish interpretation of this move up that I've witnessed on several analysts, but I disagree with. I'll explain why, but I'll explain what you have to believe in order to be a bull. Right, so the 4 moves to here, and this becomes a 3-4. This now becomes a 1. This now becomes a 2. Now, I've explained before why I don't like this, because, well, we'll talk about that in a minute, but I've explained why I don't like it before. and why I think it's a silly idea, but it could be right, and we have to be prepared to understand that. Now, 1, 2, 3, 4, 5. This is what you'll be looking for. So the bulls would be calling for one more high in the Nasdaq, and would be saying that this is a wave 1, this is a wave 2, this is a wave 3, this is an ABC into a wave 4. Now, this is an impulse wave. The only way you can count this, if you're counting this as a bull, is to count this as an impulse wave. 1, 2, 3, 4, 5. The problem is, yesterday we got an overlap of the 4 overlapping the 1, which means this can't be an impulse wave. The futures market is therefore saying that this count that I've got, 1, 2, 3, 4, topping in the 5, that this is correct. The market has topped and is going to fall. Which is lovely, isn't it? Hunky dory, you made a call and it's probably going to work. However, we've got one serious issue here, which is the cash market didn't confirm it. Now, I was certain that it was going to after we saw this break. But if we go over to the NDX, you're not going to believe how close this is. So let's just relabel the count. So we got a 1, 2 all the way back. We're not going to care about where that is. We're interested in the 3, 4 and the 5, right? So this is on primary degree. Now let's pull up the count as the bullish interpretation demands it to be, which is 1, 2, 3, 4, 5, right? Like this. And this is going to come down to intermediate time frame. And if we want, shall we just, for the sake of it, just to clarify what the bulls are saying, that they have got a legitimate impulse wave with no overlap in the 3, as you can see, into the 3, job's done, right? So I'm not going to argue with that. That's a perfectly legitimate way of interpreting this, given the fact that you're only looking at the S&P. Given the fact that you're only looking at the Nasdaq here, then that's a fair enough interpretation of events. Right. So let's zoom in on the high that we got for our 1. Let's take a horizontal beam and let's magnetize it, pop it on the top. What do we see? We touched, right? Would you say so? At 12204 spot 8, I'd say we touched until you zoom in. Let's zoom in. Oh, we touched, Tom, definitely. Until you zoom in again. 1 hour, 15 minute, 5 minute, and there it is. You've got to squint to see it. You've got to squint to see it, but there it is. There's a gap. There's a teeny tiny little gap. Alright, which means the bull count is still valid. It doesn't mean it's right, okay, but it is still valid. Here's the gap. It is less than $4. Less than $4. Right, so we know from our Elliott Wave theory, right, where we expect to find a 4. So let's just have a quick reminder. Let's come out to the daytime frame now that we've confirmed that. So what does that mean? It means the futures market says that this count's invalid, the bulls can't be right, the bears have got to be right, the market's stopped. The cash market says the bulls have hung on by the skin of their nuts, right? And that cock separates them from being right and being wrong, but it's enough to still be right. That's the rules, and that's the rules we're observing. So this is why we reversed like fuck yesterday. You know, the algorithms which were front running the traders here, or retail traders, they could not allow this level to be broken, simply could not allow it to be broken on the cash market, because that means it's game over. End of days is here, it's all done. So this level had to be defended no matter what, in order for the bulls to hang on to this market, and they defended it to 99.98% also of the move, and held on and rebounded. So this was an absolute mother of a rebound. Once we realised this level was in danger of being broken, just took off like a rocket. I mean, I have to admit that I took on a long position here on the Nasdaq the second I saw this bounce, because even if I'm right and we're going down lower and this is an impulse wave down, we're still going to bounce, right? So stop right below this level, 99.8% or so, stop below the 1220 and off we go. Even in a V wave we're going to make a hell of a lot of profit on the way back up, right? So this is the issue I've got, right? So let's talk this through now. The bulls have still got a count that's valid. We have to accept that, I think. Yes, it was invalidated in the futures market. We got an overlap, right? If I just show you it, that's the ES1. On the futures market, we can see here on the same level, we got an overlap. We broke through it. We took out that high. Now, if you're only looking at the futures, you say, oh, bullish count's dead. Bull market completed up here. It's game over. We're off our way down for the next few months and years. You know, not that there won't be huge retracements back up, but we're on our way down, and that's the new trend. We've broken the trend, and we've confirmed a bearish break of the bullish pattern, I guess you could say. But that is not the case. We can't call that, guys. I'd love to, because I've always been a bit of a bear, because just have been, and looking at the way this market's gone up against all reason and rationale. But we didn't do it. We got within a heartbeat, within a gnat's cock, as I said, of invalidating this. Now, my count obviously has us invalidating the wave 4 of the last wave long before then, because obviously I had my 1 here and my 2 here, and the 4 came all the way down here. So even on the Nasdaq, even on the cash market, here's my high. This is where my 1 would be. This is where my 2 would be. So yeah, on my count, yeah, we've confirmed a bearish break. Right, we've confirmed that we're breaking down from here and we're going lower. So on the cash market, if my count's right, that's it, we're done, we've topped, we're on our way down. If the bulls are right, they've just managed to hang in there by the skin of their teeth. So, why do I still believe then that the market is likely topped? Even though I can give the bulls a benefit of the doubt. We have to give them the benefit of the doubt, right? We have to. Cash market takes precedent. Go and read the rule book. Elliot Wave principle. It was not invalidated in the cash market, therefore it was not invalidated. But what do we know about Elliot Wave that can at least make us suspicious of this being a legitimate wave 4? Well, if you haven't seen it, go and watch my playlist on Elliot Wave theory on my channel. I'll leave a link to it in the description below. 1, 2, 3, 4, 5. This is our impulse wave, right? What do we expect wave 4 to retrace? Almost got the eyes for it. I'm normally spot on, but just close to it. We normally expect wave 4 to retrace 38.2, right? 38.2% of wave 3, and not to invalidate the peak of wave 1. What we've managed to do here, if we just measure it, is we've come down and down and down and down and down, and we stopped within a heartbeat of wave 1. So we've got within, like, I don't know what this gap is here, but in terms of the available space we're allowed to retrace, we've retraced 99.9 something of it in order to stay valid and not break this level 1 top. And we've managed to do it in the Nasdaq. If we just have a quick look at what we've actually done here. So what we've got is more than a 50% retracement in the wave 4. Now, that's not impossible to believe, not even for a heartbeat. That's perfectly acceptable. We could come down deeper. It depends on the height of that wave 1 and the length of the 3. But we've gotten so close to invalidating it and yet haven't. I find it a little odd that we would run a wave 4 with such an insanely deep retracement to make up for the fact that we've had such a weak wave 3 in comparison. So maybe all you need is the slightest tick back up in a 5 if you're going to be on the bullish camp. Slightest tick back up of a 3, and that would be enough. Now, we all know what this pattern is when you end up with a 3, 4, 5 that only just clears the 3 or comes up to the 3, a percent or 2 above it or even less. We call it a double top, don't we? Yeah, because obviously that's exactly what it is. And then you come down. So you go peak, down, double top, done. We also have another bearish pattern, and this is why I wanted a naked chart to try and keep it nice and clear for you. We've got another bearish pattern here which played out on the Thursday and Friday. We've got a head and shoulders, quite clear head and shoulders. Let's just zoom in so you can see. So this is a bearish pattern. So what does a head and shoulders mean? Well, a head and shoulders is, there's two ways of interpreting it from an Elliott Wave perspective, isn't there? What you've got is 3, 4, 5, A, B, C. right? That's the one way of interpreting a head and shoulders. And then you've got the other one, which is 3, 4, 5, 1, 2, 3, which means 4 and 5, rather than completed correction. So a head and shoulders that appears at the top of a wave 3 would be 3, 4, 5 ABC. A head and shoulders that appears at the top of a wave 5 would be 3, 4, 5, 1, 2, 3, 4, 5, so on and so forth down. Right? So which one have we done? We've got a head and shoulders at the peak of the market, but is it a wave 3 into a 4, or is it the wave 5? So is it 3, 4, 5 ABC, wave 3 coming up into down into a 4, up into a 5 to complete the 5, or is it 3, 4, 5, 1, 2, 3? That's our options. Or even 1, 2, 3, 4, 5, 1, 2 to come back up, 3 down. So we really are in a bit of a bind at the moment. My initial count down says that it's the top of the market, but the fact that we didn't get confirmation and we turned around like our lives, like the universe depended on it. You know, we turned around in a matter of seconds if you were watching it. That suggests to me that the bulls were desperate to hold on to this. Just absolutely desperate to hold on to this. The algorithms were, because they know what it means if it breaks. It's game over. That's it, done. So that's if anything, that could be an argument for the bulls, couldn't it? That such an effort was made on the last day of the week, on the close, to turn this thing around at the end of the first week of the new month. You know, as if you're going to do it, when are you going to do it? And then you've got the next thing I want to look at is the Dow. So here's the problem. Here's why I'm still leaning into the bearish count. If you're a bull, you've got to count this, as we said, as a 1, 2. This is the September through October correction. 1, 2. This is our wave 3, 4 on my count. Like that. 1, 2, 3, 4, 5 to come. This is also a way you can count either an impulse, which some people would disagree with, or an ending diagonal on the S&P 500, of the S&P 500. Also as a 1, 2. Here's my problem with it. The Dow doesn't allow you to do that. Because the Dow can't have you counting this as a 1, 2, because the 2 comes lower than where the 1 began, and that is the first rule of Elliott Wave theory. The 2 can't retrace the start of the 1. So this cannot be 1, 2. Literally cannot. Impossible. Cannot be a 1, 2. Not allowed. Alright? So this can only be an ABC. Which means my interpretation of wherever the 1, 2 was, who gives a shit, here's the 3, 4, and 5. My interpretation is that this is a 3, 4, and it's backed up by the Dow, and it has to be. But Tom, why does the Dow have to be doing what the Nasdaq's doing and what the S&P is doing? Because that's all it has ever fucking done ever. You know, it's been in lockstep for 12 years. It hasn't gone up as drastically, but it's followed the same upward trend. You know, oh, it bottomed in the March though. What, did it carry on going down while the others went up? No, it went up, right? And it followed the same pattern, and it corrected in the same months at the same time. But it did something different in the last correction before moving up. It separated. It did something different from the S&P and the Nasdaq. I don't think so. I don't think so. All right, and I know that's my opinion. You're like, oh, I reckon it could. Fine, if that's what you think, go and produce your own analysis to support it. But I don't buy it. I don't buy that you could have the exact same correction, 3-wave move, but it mean 2 completely different things. Not with the market continuing higher afterwards. Now, in the Dow, we've still got this fuck off gap to fill. And it ain't filled it. So this supports my idea that this is the 5th and final wave up. That we've gone 1, 2, 3, 4, 5. Maybe the count here, you could stretch or extend this into a 3, 4, 5. Maybe it has to be an ending diagonal because of all the overlapping, which would mean 5 waves up here into an A, for example. 5 waves up here into an A, 3 waves into a B, and the last 5-wave push higher. Okay, you could argue that, and that would be the only way you could support this, would be that you're extending this part of the count. You're not putting in the 3, 4, you're extending this part of the count because this is an ending diagonal. That's how you'd have to look at it. How you'd count it, I mean, Jesus, it's such an overlapping mess. I mean, this is no more a wave 3 impulse wave than flying the fucking air. If you're trying to count this as a wave 3, you've lost the plot. I'm not saying it isn't as a diagonal, but there's no way you can count this as an impulse. Just a sideways piece of shit. You know, which supports the idea that this is a 3-4 and this is an ending diagonal into a fifth, in my mind. Now, I'm not saying I'm right, I'm just saying it's a possibility. So how would we get up here? You'd have to probably say there's a zigzag in here for a 1. And then there's probably one zigzag like that. And then it's a bit of a mess. And 3 there. Honestly, I haven't actually looked at trying to sort it out. I think I've got a count in the ES1, but I abandoned the idea of trying to count this as an impulse wave on the down. I've scrapped it anyway because it just doesn't work. So I need to go away and look at this. But either way, we've still got the same channeling. We've still got the same, rough shape. It's a lot shallower than you saw in the Nasdaq, where we can get an impulse wave out of it. Now in the ES1 we struggle as well. Now I have been able to force this as an impulse wave. If I just show you my count I did a moment ago. We go back to my chart of the SPY. Right, so I managed to get an impulse wave out of this. There's some people who say you can't do it, but maybe they're just not as forceful as I can be sometimes. I've managed to get a legit impulse wave out of here with no overlapping on the intermediate, minor or minute time frame. So I've managed to get an impulse wave up into a 5. You just can't do it on the Dow. It's just not possible. We've got this gap to close, right? A lower low, so we can't count this as a 1-2, which would make life a shit ton easier, because then you could say 1, 2, 3, 4, 5, and some kind of fucked up 3, where you can maybe get away without an overlap, but I don't think you could. But at least if this had been a lower, if this hadn't been a lower low, you could have at least counted it as 3 waves into a 1, right? So you could, let's say it was an ending diagonal, you went 1, 2, not as low, 3 into a 1, 3 waves into a 2, and then bup into a 3, bup into a 4, bup into a 5. And that's how you'd probably have to count it. So, just to recap, I know I'm waffling. Like I said, if you're not interested in this bit, don't watch it. But I know I'm waffling. But setting a lower low in this mid-correction here, this is an ABC 3 into a 4. If you're a bull, you have to believe that the Dow is doing something different from the rest of the market. And I don't think there's evidence to suggest that it is. If it was going sideways or even going down, I'd probably buy the argument. But it stayed in lockstep the whole way. So I don't believe the count's any different. I just don't believe it. Alright, so on that basis, I have to count with what I believe, and I believe that we've topped, and now we're coming down to start a first move down. So, okay, I think I'm gonna have to leave it there, guys. Let's just have a quick look at this alternate count here for the idea of a wave 1, 2, 3, 4, 5 for the S&P 500. This is using the ES1. Now, this is the idea of a series of 3 wave structures. A series of 3 wave structures in an ending diagonal. This is the only way I can see us getting up to a new high. Because the bulls defended that area in the Nasdaq, right, as they've defended this pivot here in the S&P, if I just show you a pivot wave 4 here, right, this would have to be their count. You defend this pivot wave 4. We get awfully bloody close to it, but it's legal. It's legit. Let's just see what we retraced. Right, through the 78.6, almost to the 90%, almost 90%, but it's still legit. It's not a lower low, just as we saw with the Nasdaq, but at a level down, 1 level further down to the wave 1 here rather than the wave 4 invalidation. We've got the wave 1. So the bulls defended this like their lives depended on it. It just flew up yesterday after it got close to this low. It just went, oh my god, we've got to get out of here, and that's what they did. So on this count, we see a zigzag here, 1, zigzag here, 2, absolute fucking nightmare of a move here with a double or triple combination in the B wave. It's got to be. And then a zigzag into the C here. This gives you 3 wave move, 3 wave move, 3 wave move into the 3, 3 wave move into the 4, and final 5, 3, 5, 3 wave move into the 5th. That's the only count I can see taking us higher, and I'm not saying it's wrong, it could be right. Because of those levels getting defended, it could be right, so we've just got to be wary. Now, right, that's it guys, I'm going to leave it there. It's essential to identify these pivotal moments in the market. This is why we respect Elliott Wave. This is why we keep a close eye on the count, because sometimes when these things come, validation or invalidation can lie within a few cents. Just a few cents. Now there'll be people out there who will go and find some bullshit news story as to why that happened. You know, they'll be like, oh, so-and-so said such and such. Yes, so-and-so chose the exact moment in time and space in which the market would have even turned bull or bear. They chose that exact moment to say such and such, to turn the market around at this moment in time within a few cents of being invalidated. Bollocks. Right? Something happens and then we go and make sense of it. That's what the chart tells us. Show me the chart, I'll tell you the news. Alright? We were close to giving the market up yesterday. We were close to saying it's all over, and then it wasn't, in a flash. That's got nothing to do with news flow, guys. It's all about the chart. Alright, thank you very much for joining me on this coverage of the S&P 500 and the Nasdaq. I know it's been a really long one, this one, guys, but like I said, I will timestamp it. If you're new to the channel and you've liked what you've seen, please subscribe and smash the like. And leave us a comment in the comment section below if you have anything interesting to say or you want to share your thoughts. Please try and keep it around technical analysis if you can, though. I don't like to discuss fundamentals. And that's it, guys. Feel free to share these videos, and I'll be back with you as soon as I can. Take care. Bye bye.